Welcome to Achieve Wealth through Value Add Real Estate Investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals. Now, here's your host, investor and author, James Kandasamy.
Hi, this is James Kandasamy. Thank you for listening to this podcast. I appreciate you. I know I provide a lot of value through this podcast, and I want you to share it with your friends, with your families, and anybody else that you know that kind of benefit from listening to this kind of content. Go and share it through Facebook, through LinkedIn, through Twitter, through Instagram, or any other channels that you want to share it, because sharing is caring. Thank you. Let's go on with the show.
Hey, audience and listeners, this is James Kandasamy from Achieve Wealth through Value Add Real Estate Investing Podcast. Today, I have Ashley Wilson from Philadelphia. Ashley is a specialist in asset and construction management. She's an asset manager and also taking care of construction as well. So it's going to be a very interesting discussion. She's a GP in 350 units and also have invested as an LP and working on deals on her own as well. So which is an awesome. Hey, Ashley, welcome to the show.
Thank you so much for having me.
Good. Have you been on podcasts before?
Yes.
Okay. A lot of podcasters? Or
yes.
Okay, good. So looks like you're becoming, you're going through that podcast circuit, I guess, right? So,
yes, I have been on the podcast circuit for a little while now. Yeah.
Okay, good. So a lot of times when I bring guests into my podcast show, I usually bring operators, which are people who buy deals, who does the raising money, who does the asset management as well, and who also do the rest of the investor relationship as well. A lot of times, some people do not do the third-party property management or in-house property management. They're not vertically integrated, but some are. But you are special because now you are an asset manager and you also do construction. Can you tell us a bit more about your role as an asset manager and construction manager?
Absolutely. So what I like to tell people about operations on multifamily is operations are very important. In a down market, they are the most important. And what I like to specialize in is everything from once a property goes under contract, even prior to that, looking at the numbers, making sure that we account for how things actually happen as opposed to just accepted statistics in multifamily in terms of underwriting, because every market's different and the way in which you operate a property can be vastly different from market to market. So being very well versed on what things work within a specific market, accounting for it within underwriting, then verifying it during the due diligence process, and then ultimately operating according to the business plan, or if the business plan needs to be adjusted to make a better value for the property and ultimately a better return for the investors, is what I'd like to, that's what I enjoy doing the most. The property, the real estate component of multifamily is what excites me. I know some people really enjoy networking with investors and, going to dinners and doing all of those things. While that can be very exciting, it's really exciting to me, the property and how much money I can squeeze out of a property. That's what I enjoy doing.
Got it. I'm an asset manager as well, so I really appreciate what you're saying because, you can go around and raise money from people. You do a lot of advertising, marketing to get people to give money to invest, and a lot of people give up on that, right? But once you close on the deal, executing the business plan is the harder part, right? It's not the closing the deal. It's easy to close a deal, especially pre-COVID when markets peak. There's so much of money chasing multifamily. There's so much of boot camp, and so many people want to invest, right? Everybody has this FOMO effect. But you're right. I mean, executing the business plan is hard, right? And I've seen a lot of people who was like very motivated before closing because they tell all the fun story, but after closing, they're very quiet, or they don't really talk about their performance on their property, right? Nobody really declares about their property performance because, it's hard to really do post-closing execution, right? So let's talk about this asset management fee, and some passive investors, especially new one who comes in, ask me, why are you taking asset management fee, right? What about why not asset manager is the same as property manager? Can you differentiate between that? I mean, I can add my things and differentiate property management and asset management.
Yes. So there's a couple of questions there. I think that an investor is seeking an answer to. The first being the difference between the two positions. Property managers and asset managers, a lot of times when you speak to people who own multifamily, they see that a property manager works for an asset manager. I do not see that the same way. I see it as we're a team and we work together. And the only way you can achieve your business plan optimally is working in conjunction and partnering. And ultimately, the asset manager has a different client, number one client that they're answering to. They're answering to the investors. The property managers, they're answering to the tenants. And they're making sure that the property is the best property for that particular tenant, that demographic. And if someone doesn't really understand everything that a property manager is doing, a property manager, in my opinion, is comparable to a teacher. They have more things on their plate than they have hours in a day. They are doing marketing, they're doing general service complaint calls, etc., for the property. So they're managing the current tenant base while also trying to attract a new tenant base and also trying to execute a business plan for the ownership group. It is very, very difficult to do, especially in terms of the metrics, the national metrics for property managers, number of property managers per unit. Typically, it's one inside, one outside per 100 units. So, for example, a 100-unit property would have one interior property manager and then one maintenance person on site for every 100 units you have. That can happen on a property that is a stabilized asset, but a lot of times, especially the properties that I go after, they're value add assets. So there are things firing on all cylinders because there's deferred maintenance that we're tackling. There's tenants that should not be in the property that were put in the property probably by previous ownership. So they're really trying to tackle a lot of different things. The asset manager, on the other hand, the asset manager answers to the investors. The asset manager is the person responsible for protecting your investment. They're responsible for maximizing the dollar, that every single dollar that's placed in that apartment. We want to try to get 2 times that dollar, 3 times that dollar, up, 10 times that dollar. That's what we're trying to do every single investment we make on a property. So what we're doing is we are the added layer of protection, looking to make sure that the day-to-day operations are not only executing that business plan that you have in place, but also maximizing the investment. And I say that, and it sounds like a broken record, but truly that is what an asset manager does. And there are so many things to make sure that you're doing, from vetting contractors, making sure that you're getting the best price on the renovation, to it's very strategic when you're doing renovations, how you should do the renovations, how much you should do, how little you should do, what rents you can charge, what's the absorption rate, what is the market comparables in that market that you can push the rents. There are so many different components. I could probably talk for an hour alone on just different components that I look at even on a daily basis, let alone on a weekly or monthly or quarterly basis. So to me, it's a full-time job. That is why personally I've been able to execute business plans a lot faster than, I've had 2 properties where I've had to execute a business plan. On the first property, it was a 2-year business plan with a refi in year 3, and I was able to execute it all under budget within a year. So I think that's pretty impressive. And then on my most recent property, it was a 4-year business plan that after we executed the renovation over 4 years, then at the end of 3 years, we would refinance in year 4, and we were able to execute the business plan in a year, actually less than a year, and also under budget. So that is the difference between having someone oversee your investment on the asset manager side and work in conjunction with a property management team. I've been very blessed to have an incredible property management team that I work with on these properties. So for us now, we have systems in place to make it even easier to execute everything we do.
Got it. So let me summarize what Ashley just mentioned, right? So asset managers basically, approve, execute property budgets. They look at property financials, reporting, and making sure the budgets are met. At the same time, they also have to make sure that you are able to execute what you thought in the beginning, whatever pro forma and whatever the original sponsor has planned for that, and they have to make sure they hit that as per the budget as well, right? So do you work any part of it as part of the investor side of it, like investor tax document, any other things on the investor portal and all that, or is it all that sponsor takes care of it and asset managers just on the asset?
Well, I also am a sponsor. I sign on loans. I'm not just doing asset management.
Okay.
So in terms of, and I've also brought my own investors in on deals as well. So in terms of being fully involved, soup to nuts of, whether or not we execute a cost segregation study, getting the K1s out, getting all the information. I provide all the reports to the investors. I'm the one who creates all the reports for the investors. So really, I'm doing soup to nuts. I do it in a very granular fashion. So I'm a full-time real estate investor. I think, there is lots of opportunity for people to get in multifamily while working a W-2. And there's a point in which you absolutely need to transition. I don't know how someone could keep up with all the work that you need to do for an asset manager of a larger property when you are also juggling a W-2. On maybe a more stabilized asset, you could probably do that. But in terms of the volume, if you want to scale, ultimately what you would be looking to do is to do it full time, which is what I do. So in terms of prepping everything that the investor needs for, whether it's preparing their taxes or doing things for the property, I just really make sure that I'm the glue that puts all those pieces together.
Got it. So let's go a bit more technical here, right? So you have a plan from the sponsor, right? So when you're working as part of the sponsorship team as well, and now you said, Ashley, you're going to asset manage this, right? And we talk about absorption rate and renovation progress, right? So let's go into each one of those. And you say like 4 to 5 key indicators that you look at. Can we just quickly summarize that? What are the four to 5 key indicators that you look on either daily or weekly basis?
Okay, so first, I also wanted to mention that despite how many properties I have, I also consult with other sponsorship groups. What they'll do is they'll bring me in, and I will basically audit their property, and I will point out all the things that they could improve upon. So there are things that I look at when I'm auditing other sponsors' deals. And then there are also things that I look at on a daily basis for my property. I can speak to the things that I think probably most people who asset manage, they don't have the time to look at things on a daily basis. So they're probably looking at more on a weekly basis. So I'll share what I look at on a weekly basis, because what I look at daily versus what I look at weekly, what I look at monthly and quarterly are completely different. So what I look at on a weekly basis is obviously I'm going to look at my traffic. I'm going to look at my occupancy. I'm going to look at move-ins and move-outs. I'm going to look at work orders. How many of those work orders are emergency work orders, categorizing the work orders, time of resolution, and then in terms of repeat work orders and or the reviews of the work orders. So in terms of whether or not someone would give the work order a 5-star review, or 1 star, those are things I'm looking at. I'm also looking on the traffic side, where's my traffic originating from by source, and what's my conversion rate on those sources. So that way I know very thoroughly which traffic sources are working, which traffic sources aren't. I also look at on a weekly basis specials within the market to make sure that my property remains competitive. I look at my renewal rate. I look at a lot of different things. I'm trying to see if I'm remembering every single aspect, everything that I look at. But ultimately, what I'm trying to do is I'm looking at the property in such a detailed fashion as if I was operating the property, with boots on the ground. So that way I can make little adjustments immediately when I see that there's a need, as opposed to waiting until, let's say, for example, I've plugged a lot of money into a marketing campaign that I don't see working, 3 weeks in. I'm going to yank that marketing campaign as opposed to keep it running for 6 months and lose that investment when I could have plugged it into a resource that's giving me a higher conversion rate and higher traffic. So that's really the things that I'm looking at. I'm looking at how to influence the people who are coming into the property and how to influence the people to stay at the property.
Got it. So let's talk about renovation per unit, right? I mean, before you close on the property, I mean, let's say, for example, 5,000 per unit, right? And post closing, how do you track how's that 5,000 per unit budget being tracked? How do you know that's very effective in terms of your rent growth and your NOI growth and meeting your business plan?
So when I go into a property, I know exactly what I'm going to do to that unit. And day one, I pick every single finish that I want for that property. So that's inclusive of, if I'm going to change the flooring, I pick out the exact flooring I want. I pick out the paint. I pick out everything. And then what I do with my management company is because I'm not located in Texas and my properties are located in Texas, we've implemented systems where we have a tracking system. So it initiates what units are available to be renovated and what condition they're in. And then we put together a package on what that particular unit needs. So I know to a penny how much that unit costs to be renovated. And then ultimately what I do is then I track the progress of the unit through pictures, before pictures, during and after pictures, so I can see the progress of the unit. And then I can see what the total cost of the unit, if there are any change orders. Typically, I don't have change orders unless there's something extremely grave at the property that is unexpected. But I've been in construction long enough to know I'm raised by a general contractor who's had his own business for over 40 years. I'm very well versed in construction, that I know how to negotiate prices. I also have a lot of context so I can get prices down pretty well. So in terms of verifying afterwards, I then confirm the cost per the unit, and then I have my own tracking system to ensure that I stay below budget. And that's how I've been able to stay below budget on all of my projects.
So let's go into that process, right? So now you have a unit that you're going to renovate. And I presume the property manager is the one that's going to give you the budget on the progression of whatever being spent on that unit. Is that right?
Well, what I do is I package it. So I know, for example, there's two things in construction. It all comes down to labor and material. I know how much material is going to cost me, and we have a checklist on what that individual unit needs. So I already know up front what the material is going to cost me. And then what it comes down to is what the labor is going to cost me. And in terms of the price per labor, everyone should know how much it costs to switch out an outlet, how much it costs to switch out a fixture, how much it costs to paint a room. I know all of these numbers. So if someone says to me, okay, this unit costs this much and it's over budget, I can then question them and say, why is it over budget? And they'll say, because, our guys spent 3 more hours. Well, why did they spend 3 more hours on this unit versus another unit? Oh, well, there were some issues. Well, you walked that unit in advance. You knew what the unit condition looked like. And, if it's, let's say it's painting, you knew, unless I replaced, I put up a whole new wall or took out a wall and I reframed it, you knew what the estimate was. You knew the square footage of the wall that you were going to paint. We have it priced per room. So it's very easy for me to argue because I know it's such at a granular level that I can get the price down. That's how I confirm that I stay on budget, is to know all of the prices to that level.
So you're assuming that, or maybe you already have a really good crew which is working as what was planned, right? Otherwise, you're going to always question them why you guys are late, because that's another period. That's another variable, right? You have schedule, right? I mean, you have your materials, you have labor costs, but they can take forever to finish one unit. How do you keep track of that one unit renovation?
So we have, in terms of scheduling, we have certain times in which we release a certain amount of units and then they get them to renovate. I have worked with contractors for years now across all different types of properties, single family, multifamily. And if one thing I have learned along that process is that when you work with someone for the first time, you're not going to give them an entire job. You're going to give them a piece of a job, and they're going to have to prove themselves to get the rest of the job. These contractors, when I have large multifamily properties, they want the entire job. So they're going to work very diligently at the beginning, and hopefully throughout the entire project, but most likely they're going to work very diligently at the very beginning. So I will give them a little piece of what I need them to do in terms of the grand scope, but I'm not going to give them the whole scope of the project initially when I have no track record with someone. So I'll give them a little piece of the pie at the beginning. If they prove themselves, I'll give them a little piece more. If there's any issues up front, I just pull that crew and get a new crew immediately. So I minimize my risk of loss and I minimize my risk of loss of time. So it's loss of time and a loss of dollar amount. And honestly, time is also equatable to dollar amount too. So that way I just minimize the risk across both.
Yeah. Well, that's exactly what we do as well. I mean, we usually hire for a few new project, we hire like 2-3 crews and give them a small portion and see who's doing the best and kick out the other 2 and keep one and keep on giving them the work, which is a good validation of what we do too. All right, thanks for that. And what about the how do you work with the property managers on site? Because you can't be on site, so you need a lot of communication. Unless the contractor is giving you the data directly to you through some kind of Excel spreadsheet,
Both.
or you're having meeting with them, so you're doing both.
Yes, both.
Okay.
First, before I got into real estate, I worked in pharmaceuticals. I worked in clinical research and development, and I worked on global clinical trials. So I worked on studies all over the world, and I had to leverage technology. So my entire professional career, entire working career has always been in a virtual capacity. I have become very well versed on how to work remotely, and I've put into play different things to make it very advantageous for me to work remotely by leveraging technology. I've taken that same approach and applied it to multifamily. Before I got into multifamily, I built up a very successful high-end flipping business in the suburbs of Philadelphia, Pennsylvania. And I did that whole business while living in Europe. So even though I lived in Europe, I created a flipping company while living back in the States. I've taken the same approach, and I've done the same thing in, Philadelphia suburbs, now back in the state, living in the States, and my properties are in Texas. To be honest with you, it was a lot harder when I was working in Europe, creating the flipping company than I'm faced with today. I already had all of the systems that I built up on the flipping company, and I've just been able to apply them on the multifamily side of things. And fortunately, there's only an hour time difference as opposed to I had anywhere between a 6 to 9 hour difference because at one point I was living in Russia. So it's been very easy for me to make that transition. I have never had any single time where I said, oh, I wish I was like right down the street from the property, because the way in which I react and manage would not change by being on the property. You don't need to be physically at the property. Now, do I still go down to the property? Yes, I go down to the properties quarterly to check on the property. Also, I think there's much to be said about the relationship that's built between your on-site team and the ownership group. And I think it's really paramount if you want to run a successful business, which multifamily is real estate and a business. So I don't discount that, but I definitely think that your operations, as long as you have an excellent team, which we make sure that we always put a really great team in place, that you still can be successful.
How do you test rent growth versus your rehab?
In terms of how much I can push the rent prior to completing the project, or afterwards for absorption? For absorption. So basically, there's a certain limit of rent growth based on the rehab that you're doing, right? So how do you test that? How do you test how much you can get based on the rehab that you're doing? So I'm huge into understanding the market demographics. So what I do is I spend a lot of time researching market comparables. I look at, if I was a tenant, if I was a prospective tenant, what properties would I look at and why? What property would attract me? Would I be willing to pay an extra $10 more for property A versus property B, and what are their amenities? We live in an amenity-based society right now where people love the bells and whistles that properties provide. They love having a pool. They love having laundry in their unit. They love having, like in Texas, carports or garages. There are certain amenities that, based on the market, draw people in, and that changes by market. That doesn't mean just because you're in Texas, everyone wants a carport. Some places they don't care. They're not going to pay extra for. You really need to understand your market very thoroughly and then compete with what that market wants. If the market is a tech-based market, maybe you should implement thermostats that are able to be controlled with your phone, or laundry facilities that are able to be controlled by your phone. If you're not in a tech-based market, if you're in maybe a secondary, tertiary market, I'm not saying all secondary, tertiary markets, but I'm just saying if you're not, as close to a major MSA or a primary market, they might not be as well versed in technology, and they might not see why they would pay extra. It's really about understanding the market, understanding what is renting in a market, what properties have high occupancy, what their rents are at, what their specials are at, what amenities they have, and then trying to compete on that level. I walk the other properties. So when I go tour the area, I always make sure to tour other properties and see what their unit interiors look like, what their exteriors look like. I want to secret shop these properties because I want to understand what a prospective tenant's looking at. I want to understand how they are greeted by their staff. I want to understand if a market is Hispanic speaking, let's say, right? And they want someone to greet them in Spanish, and they want a TAA contract in Spanish, like a Texas Apartment Association and a contract in Spanish, lease contract. So they're very little things. The devil's in the details. It's really important that you understand the details of the market, and then you ensure that you are exploiting them on your property so people want to live on your property. You're providing a better value than competing properties. And that's how I test it. So then I can see, okay, this property, they're not doing granite counters, but they're getting $100 rent bump over what we had initially projected. So we don't need to go with granite counters. Maybe our business plan had granite counters in it, and we don't need to go with granite counters because I know the market will pay $100 more, even despite the fact that they have granite counters. So some people like to over improve. It's no different in flipping. People do the same thing in flipping all the time. You really need to understand not how little you can put in to get the maximum value, but in a sense that is true.
So my question is, follow-up question to what I answered. I asked just now is like, for example, let's say an ownership group come for you for consultant, right, to do consultation, and they said, hey, we planned for $3,000 per door interior rehab, and we want to get $150 rent bump, and that was our plan. And now you are coming in, and how do you communicate to them that $3,000 is not going to get $150 rent bump? Have you been in that kind of situation?
Yes, I have been in that situation, and I've been in the situation where I've been given a business plan and I went down and did due diligence with this ownership group as a consultant. And I said, hey, this is not what you want to do. You want to do X, Y, and Z, and you're going to get this rent bump instead. And it's a better return on your investment. So I think it's very hard to argue with numbers, right? Okay. So I understand underwriting very thoroughly, and all I have to do is take their underwriting and plug in what I think the business plan should be and show them their underwriting versus mine. And ultimately, I think that kind of speaks volumes to speak in that language. Most people who are in multifamily, I would say, are very proficient with mathematics and finance and understanding underwriting, especially if they're the key principal. So if you're dealing with the key principal, the operator, you really just have to speak their language. And ultimately, they should want the best return on their investment. So I've never had anyone disagree with the strategies I've recommended. No one's really taken it negatively at all.
But how if they already close on the deal and you're coming now and you think that it's not realistic?
In terms of it not being realistic and squeezing the dollar out, that really comes into a lot of people don't bring on a construction manager. And I think that's a huge shortcoming on a team. I think that a lot of people try to shortcut that position because they think they can outsource construction management to a third-party vendor. I think third-party vendors, when you hire a construction manager, they're paid off of the cost of the total construction, and therefore they are not motivated by the same reasons that your team is motivated, which is to get the highest return for your investment. So ultimately, my suggestion to them is that they need to bring on a construction manager. If they don't want to bring on me, which I'm not into, I'm not doing this to sell myself. I'm doing this to help people. I find that the more people I help, it comes back to me. I never have to worry about it. So I just say to them that I recommend bringing a construction manager in who is motivated by the same reasons as them. I get approached often to be compensated as a construction manager from a flat fee. And my comment back to them is, if I take this, then I'm a hypocrite, because what I'm telling you is that you should bring someone on who is motivated by the same reasons. The only way you will find someone who's motivated by the same reasons if they have a piece of the GP equity, because then the more work they do and the more they put into it, the more they get on the back end. And that's why you should have someone on the construction management side. And the reason I propose having someone on the construction management side is those are the type of people who not only can negotiate something, but I've used this example in other podcasts where I call it the porch deck scenario or whatever you want to call it. But basically what I'm saying is that you can go to a property and on the property you have a patio. And on that patio, it's a second floor patio. And when you do the due diligence, you have a contractor who comes in and says, all of these have to be ripped down and they have to be re-poured and the framing has to be redone and you need new posts and new joists and new concrete slab. Okay, that is one way to fix it, right? But there's another way to fix it. And that contractor is not doing you a disservice by telling you that. They're doing it because when they do their due diligence, they are not giving you advice based off of a hold period. They're not assuming that you're going to hold the property. They probably don't even know how long you intend to hold the property for. Whereas a member of your team is going to know, okay, we're trying to exit this property in 3 years or exit this property in 5 years. And really what could happen instead is you shore up one of the posts or two of the posts and you have all these cracks on the patio, but really it's a facade and it could be just resurfaced. And it'll get you through maybe 5 to 10 years, but you plan to exit the property in 3 years. So it won't be that big of a deal and it won't be that big of a risk. And you're talking the difference between maybe a $3,000 to $5,000 repair job versus $500. By having someone who not only understands the process of construction, but understands the different mechanisms in which to solve problems and negotiate, that's what you're looking for in a construction manager. You're not looking for someone who's just good at managing construction and knows a very high level of construction. You're looking for someone who really knows the details of construction because that is the way they provide the most amount of value to you. I mean, there is a reason why I've been able to save hundreds of thousands of dollars on CapEx budgets, hundreds of thousands. And it's because, I know construction like this. And I'm not just saying like toot my own horn. I'm saying you should seek someone, if you're not going to seek me, you should seek someone like me who is going to save you hundreds of thousands of dollars and get the project done faster. Because at the end of the day, if I can hit my business plan after year 1 versus year 3 or year 4, that's a different exit opportunity or a different other capital event, which is a refi. So that gets your money back to your investors. It could drastically change your returns. It gives you a better track record. I mean, ultimately, that is your ace in the hole, so to speak, of executing your property.
Got it. Yeah, very interesting. I mean, construction manager or whoever managing that construction budget gives a lot of benefit in terms of reducing costs and exiting the plan as quickly as possible. So who should be hiring a construction manager at how many units or what kind of project should they be hiring a construction manager?
I like to say that someone on your team should be well-versed in construction. If you plan to have any property that is multi-unit, even on a duplex or a quad, a small multifamily, you want to make sure that you are either connected with someone or know someone. Because the example that I like to always say to anyone who has ever owned a house, if you own one house, a single family residence, right, and you've owned it for a year, I don't know anyone who can tell me they've owned a single family residence for a year without needing some sort of work on that house, something. So when you extrapolate that across 100 plus units, across a 3 to 5 plus year hold, you're magnifying the need for someone of that skill set. So maybe on the smaller properties, it's easy to like outsource it. But when you get to larger properties, and especially when you're taking in investors, I think it becomes more important that you safeguard that person's investment. That's why I think it's really important. It's an added layer of protection for people's, whether it's college funds for their kids, retirement money, generational wealth. It doesn't matter the reason, you want to protect their investment. I forget your second part of that question, but
well, second part is like I'm missing that second part as well. But let's go to the next question because that was a long answer. But I have a follow-up question to you. I mean, in terms of the most valuable value add, right, in multifamily, I mean, you have done quite a number of construction projects on multifamily. What do you think is the most valuable value add for high ROI?
I used to think that the interiors were, before I got into multifamily, I used to think that the interiors were the most important part of value add, because I thought that where someone lives, where they sleep at night, where they're raising their family, I thought I was like, okay, that makes the most amount of sense. But the more and more I'm in multifamily and just in real estate in general, I am more of the opposite opinion, which I think the exterior matters way more than the interior. I think if you have money to place in certain, and I see that across multiple markets. I think if you were asking me for a specific market, what's the best ROI, that might be a different answer. But in terms of just a general blanket statement, I think people are really concerned of the impression that they give off. I can tell you that I see market after market where the exteriors are stunning and the interiors are horrific, and they have the highest occupancy and they're able to collect the highest rent bumps in the market, the highest rents. And then alternatively, I see beautiful interiors, but the exteriors are really dated. And those are typically the ones that are maybe a little bit more challenging, but they are definitely not competing with the other properties. And I think the people don't tend to look to do the exterior because the exterior costs more and it's a huge gamble and they don't see the added value. But ultimately, if you focus on the exterior, you impact the entire property. If you focus on the interior, you're only impacting one unit at a time. So the bump in ROI is only when you complete an individual unit, whereas bringing people on the property to begin with can be sometimes the hardest part. That's why even on single family, they always say the exterior matters more than the interior. Getting someone to visit that property, getting someone to tour it, they want to buy it. It's all about the facade. It's all about this illusion of the lifestyle that someone's living.
Maybe it's a social proof, I guess, right? You live in a nice house too. You can show it to others, I guess, right? That's my apartment. Looks really nice, but who cares about the inside, I guess, right? So,
absolutely.
And I've seen a lot of times, a lot of owners who have been doing this very long time. They like to they buy a deal, they just do exterior and they say interior, somebody else can do it.
Yep.
Right. And they sell it quickly after they do the exterior. Maybe that's a very interesting perspective that you're able to get high occupancy. You may not get high rent bump, but you may get high occupancy and stable demographic if you have nice exterior. But the rent bump comes from the inside, I guess, right? Interiors as well. We still have to do both. So I think the valuable side is more on the exterior side because that brings in people, right?
Absolutely.
Got it. So let's go to your personal side of it. Do you have, as part of your, venture into single family and multifamily, do you have a proud moment that you can never forget? One proud moment that is going to be living with you throughout your life? I'm
really just proud of the people I work with and I partner with. I've gone through some really challenging things with apartments. And when I talk with other people, when I talk to owners and operators who've been in multifamily for 10 plus years, they haven't even gone through half the things that I've gone through. And in the moment, I'm like, oh my God, what do I do? And a bit frustrated, but I think that experience has propelled me to the position that I'm in today. And the fact that I've been through a fire, I've been through a gas leak in a line where I had to replace an entire line. I've had to replace an entire sewer line from the building out to the street. I've been through multiple plumbing leaks. I've been through roofs coming up. I've been through incidences with the police being involved. I've been through a whole new rebuild of an apartment and a whole host of other things, depleting occupancy to 60% and then building it up to hopefully over 90 in less than a year is another thing I'm going to be really proud about. And I'm just proud of the people that I work with. I'm really proud of the fact that we take a team approach. We're never pointing fingers. And I also like to think of it, if I had the same opportunity to mastermind with these same people, how excited I would be. So just because I'm the one who's actually living in the moment of what we're talking about in the quote unquote mastermind, I should just think about it in a different perspective. Think about it as I'm having such a great opportunity to learn from the best people in the business and people who are really supportive. I think that opportunity is something I will never forget for the rest of my life, that I've had this amazing opportunity to connect with people and to learn from people and to help other people. It's just been something that I'm really excited about. And the other thing I'm excited about is something that I do on all of my properties is I really connect with the community. I'm not into changing a property. I'm into changing a community. That is my goal on every single property that I'm a part of, is to have an impact on the overall community, to whether it's by partnering with local nonprofits or school systems, or, helping provide food or gifts to children at holidays. Really, it's important to me that you can be successful at business a lot of different ways, but to be successful and help someone's life is much more rewarding. So I really get a lot of joy out of creating change in a community, along with helping my investors, either build or preserve their wealth for whatever reason they were doing it for. So I just really enjoy helping people.
Yeah, absolutely. I mean, we are all about helping people. We like to improve community, and we have a lot of initiatives that we do in our properties. We give school backpacks when they go to school, back to school. We do mini libraries for all our communities.
Yeah.
So we do a lot of things for our communities. I mean, when during COVID also, we helped a lot of people who lost their job and don't have food. We usually buy food for them, right? So yeah, I mean, it's all about, that's what you and I, think the same, I guess, right? I mean, you can make money in many ways, right? But helping people, it's gonna come with you to the grave, right? So
absolutely.
So awesome, Ashley. So why don't you tell our audience about how to get hold of you and how to get in touch with you?
Absolutely. You can follow me on badashinvestor.com or badashinvestor.com on the website, or badashinvestor on Instagram. On my website, badashinvestor.com, it actually links to all of my other companies. So if you're interested in learning about multifamily, I have a link there. My multifamily company is Bar Down Investments. So it's very easy. All the traffic just goes through badashinvestor.com.
Oh, that's a nice, catchy name.
Thank you.
Awesome. Thanks for coming on the show.
Thank you so much for having me.
Absolutely. Thank you. Bye.
That's it for this episode. If you'd like to learn even more, check out James's free audiobook. It's the audio version of his best-selling book on passive investing. You can get the audiobook completely free, along with other valuable resources, by visiting www.achieveinvestmentgroup.com/free audiobook. Also, be sure to join our Facebook group too. To find it, just do a Facebook search for Multifamily Investors Group. Thanks for listening. Join us again for another episode next week. See you then.